The idea of credit, borrowing money to buy something now and paying for it later, is very old, but the credit card as we know it had a more recent start. In the late 19th century, some stores gave customers metal tokens or paper cards. These cards let people buy things on credit, but you could only use them at that specific store. Then, in 1946, a banker named John Biggins invented something called Charge It. This was a paper card that let people make purchases at different stores in New York City. These purchases were all put on a single bill at the end of the month. In 1950, Frank McNamara created the Diners Club card. This card was different because it was made of cardboard and could be used at many restaurants. People used it to pay for meals without carrying cash. The Diners Club card was the first widely used credit card in the United States. These early credit cards were important first steps. They showed that people liked the idea of paying for things over time, and they paved the way for the plastic credit cards we use today. In 1958, Bank of America changed everything when it launched the Bank AmeriCard. This card was made of plastic just like the ones we use now. It was also the first credit card that could be used at a variety of businesses. The Bank AmeriCard was a big hit. People liked that it was convenient and easy to use. Other banks started issuing their own credit cards, and soon, credit cards were everywhere. In the 1970s, computers made it easier for banks to process credit card transactions. This led to even more people using credit cards. During this time, magnetic stripes were added to credit cards. This made them more secure and harder to counterfeit. The way we use credit cards continued to evolve. We got rewards programs, which gave people points or miles for using their cards. We also got cash-back cards, which gave people a percentage of their purchases back in cash. These perks made using credit cards even more appealing. Credit cards made buying things easier than ever before. People didn't need to carry around a lot of cash. They could buy something even if they didn't have the money right away. This led to a big change in how people spent money. Credit cards helped fuel the growth of online shopping. With a credit card, people could buy anything they wanted with just a few clicks. This made it easier for people to spend more money, even if they couldn't afford to pay it back right away. While credit cards offered convenience, they also created new challenges. People started to go into debt because they were spending more than they earned. Interest rates on credit cards could be very high, making it hard for people to pay back what they owed. Despite the risks, credit cards became a central part of our financial lives. They were essential for renting a car, booking a hotel room, and making online purchases. Credit scores, a measure of our financial trustworthiness, became very important. Today, credit cards are still evolving. We have digital wallets on our phones which let us pay for things with a tap. We also have virtual credit card numbers which make online shopping safer. As technology continues to advance, we can expect even more innovation in the credit card industry. The credit card has come a long way since its humble beginnings. It has changed the way we shop, the way we think about money, and the way we live our lives. The future of credit is sure to be just as transformative as its past.